So let's unpack this. We've got a pretty fascinating deep dive today. We're looking at the latest Bitcoin analysis, specifically for this week, July 25th, 2025. Our source is a detailed market overview, really packed with insights. And the mission for you listening is, well, to cut through the noise, right? Quickly grasp the market tone, those key indicators, without getting sort of lost in the weeds. So right now, Bitcoin's trading kind of tight between $118,600 and $119,200. This is after hitting a fresh yearly high earlier in July. The big question from this analysis seems to be, is it gathering steam for another push, or is this consolidation maybe a sign of a pause? What really jumps out from the analysis, though, is the market sentiment. It's described as overwhelmingly bullish. It's not just hope, right? It's backed by some pretty powerful factors. We're talking record ETF inflows, serious capital pouring in, plus favorable macro trends and significant institutional accumulation. That's the big one. We're even seeing strong buying on the recent dips, which, signals really robust underlying demand. People want in.
Yeah, exactly. And what's fascinating here, technically speaking, is how Bitcoin is just kind of sitting, consolidating right below a key resistance level. The analysis highlights $118,500 up to $120,250 as that immediate ceiling. It's seen multiple rejections there just this week. It keeps bumping its head against it.
Right.
But on the flip side, the $116,000 to $117,200 area, that's been acting as a real bounce zone. Buyers keep stepping in, showing their strong support down there.
Okay, so we have these clear battlegrounds. How does the analysis translate this into actionable zones for someone trying to navigate this? Where are the key areas to watch?
Right. So based on the source material for what they call moderate risk entries, that primary buy zone is indeed $116,000 to $117,200. Dips into this area have just consistently found buyers, so it's seen as pretty reliable for pullbacks. Now, if we did get a larger correction, there's a more aggressive accumulation area pinpointed around $115,000. That's where the analysis expects significant strategic buying. I think bigger players may be waiting there.
And what about the other side? For taking profits or maybe even tactical shorts?
Yeah, for profit taking or, like you said, tactical shorts. That current resistance band of $118,500 to $120,250 is the key sell zone right now. If momentum slows there, that's where you might see selling pressure increase. And if we do manage to break through that decisively, well, the analysis points towards an upper target, around $122,500 and $25,000. But expect more volatility up there, maybe increased selling pressure as it hits those higher numbers.
Okay, that paints the immediate picture, but this analysis also gives us some potential price targets for July based on different scenarios, right? Can you walk us through those?
Absolutely. So in the bullish scenario, that target range of $122,500 and $25,000 is definitely seen as possible. But it hinges on, continued strong macro conditions, those ETF flows staying strong, and crucially, a sustained breakout above $120,250. Specifically, they mentioned a close above $120,250, maybe $120,500. That could trigger a pretty rapid move higher.
Makes sense. What if it just stays stuck?
Well, if that immediate resistance holds firm, then we're likely looking at a consolidation scenario, more neutral. Think choppy trading, probably range bound between, say, $116,000 and $120,000. Buyers would likely keep defending that lower support level.
And the downside? What's the risk?
So the downside risk scenario involves a deeper pullback, maybe towards $115,000 or even the $113,500. That would likely happen if the price actually falls and, importantly, closes below $116,000. However, the analysis really emphasizes that institutional demand is expected to cushion declines around there. That $115,000 level is framed as major support. We've seen it hold before.
Gotcha.
And underpinning all these outlooks, you have some strong technical signals, things like RSI and MACD, key momentum indicators. They're showing bullish readings but aren't super overbought yet. Plus, you've got the ongoing high volumes really boosted by those ETF flows we mentioned, and a whole broader macro story, potentially lower U.S. rates, ongoing institutional adoption that just keeps feeding the overall bullish bias.
Okay, so let's try and tie this all together for everyone listening. What we've basically unpacked here is Bitcoin consolidating, just under a key resistance level. But the bigger picture, the trend, it clearly remains bullish, according to this analysis. There's strong potential for a move up towards that $122,500, $25,000 zone, especially if it can break and hold above $120,250. And really crucially, even if there is a dip, the downside risk seems contained, particularly above that $115,000 mark, thanks to that expected institutional buying. So hopefully understanding these specific levels, these drivers, gives you a much clearer picture of what's actually happening out there.
Yeah, and it really raises an interesting question. building on what the source material highlights, given this ongoing institutional accumulation, this whole adoption narrative that seems so strong, what would really decisive sustained move above $125,000 actually signal? What would that tell us about the longer-term mainstream integration of digital assets into the global financial system? Something to think about.